Hello, today we are going to solve May 2023 paper question number 2. Prepare the journal entries correcting the errors 1 to 6, narratives not required. Barsha prepared a trial balance and it had some errors. So we are going to solve each of these errors from 1 to 6 and thereby prepare a journal entry for the same. So a payments of 900 made to the owner of the business had been recorded to the wages account. So let's include the first account two double entry. So two accounts will get affected. One is the wages and the other one is going to be the drawings because it states owner of the business. So personal use, it is going to go into the drawings. So drawings and wages account. Wages account, we know it's an expense account. So anything we have to include, okay, it has to appear on the debit side. Okay, first it was included in the wages, so you have to remove it. So for removal, you would have entered on the debit side. So for removal, we have to enter it on the credit side. So you enter 900 for the removal of the debit that had been done to the wages. So you will have to include on the credit side. Then drawings in we have to include. So the drawings is in the debit side. So you include 900 there. Then the second one, notification had been received that a trade receivable P. Grims was bankrupt owing simple really 3,150. No entries had been made in the books. So now P. Grims we have to is one of the accounts that will get affected. The other account is going to be irrecoverable debts because that's the double entry for not receiving the amount, okay, when it goes bankrupt. So irrecoverable debt account is an expense account. So to include anything, we have to include 3,150 on the debit side. So just include that, and in the trade receivables account, it is going to appear on the credit side. So let's include those two entries 3150. So 3150 on the credit side, and for irrecoverable debt, which is an expense account, this is going to appear on the debit side. So the next one is the small office equipment items costing less than 10 pounds have to be recorded into the sundry expenses. So sundry expenses is one of them, and the other account where it had been recorded, two items were recorded for 6 and 8 pounds was office equipment account. So the other account that's going to that there where there was an error with the double entry was office equipment. So we have to correct these two entries, okay, made. So you are going to we have to include in the sundry expenses account. So 14 pounds have to be included into this, and we have to remove from the office equipment by putting it in the credit side. So 14 on the debit side, and you remove the extra amount that had been put on the credit side, okay, because even office equipment you would have entered in the debit side as an asset account. Then discount allowed had been recorded in the personal accounts for the total of 120. It had been credited to the discount allowed account. Now one of the entries correct, so the double entry is going to go into the suspense. So discount allowed 120 has to be removed because wrong side entry had been done, reversal entry. So you will correct the entry by putting it as double amount on the debit side, okay. So one is for the removal and one is for the correct entry. So 240 will be put in the discount allowed account, and since there is no other double entry for this that's going to get affected, and there it was done correctly, so you will pass it on to the suspense account, okay. You should be watching if there is only one account that's going to get affected. Sales on credit to Jerin, okay, had been 230 pounds had been correctly entered in the sales account, but it had been recorded as 320 in the account of Jerin. So from Jerin we have to remove certain amount, and Sales account, it is correct. So one of the double entry is correct. In the gerund it had gone wrong. So from gerund we are going to remove 90 pounds that was put extra. Okay. So the sales would have been on the debit side. For the removal, we will enter 90 pounds on the credit side, and then in the suspense I'm going to put on the debit side. Then office expenses 45 had been recorded correctly in the cash book, but no entry had been made in the books. Omission entry, so we have to include a suspense. Okay, so office expenses, and the other one is going to go into the suspense. Okay, so it was correctly recorded in the cash book. So in the office expense is an expense account, so you include it. So 45 pounds exactly here, and this I'm going to transfer it to the suspense account. Okay, so these are the journal entry correcting those errors. Now, next question is explain for each group 1 to 3 the accounting concept or convention that had been broken. We can see that for the first one, drawings had not been recorded, so which means business entity concept had been broken, where you had to keep the identity between the business and the owner separately. For example, the drawings made for any personal use by the business owner has to be included in the drawings account, and it should not be recorded as expense. Okay, this is going to be included as drawings in the expense account. Okay, now we can see that the for the second one, okay, for the second one, notification have been received that a trade receivable had gone bankrupt, but no entries had been made. So any profit and loss have to be recorded, otherwise prudence concept will not be followed, because profit would get overstated. Okay, here irrecoverable debt less expense, so profit will get overstated, and any losses incurred, okay, has to be here recorded. Then for the third, small office equipment, materiality concept, only cost with substantial value that could distort the profit should be recorded as non-current assets. So otherwise you will record it as a small expense, sundry expense. Okay, so it should not be recorded as non-current asset. Okay, because it can distort the profit by a large amount. So you will just record it as a small sundry expense. So materiality concept was broken in the third one. Then prepare the suspense account showing the original difference in the trial balance. So the thing is, we had already prepared the journal entries. So whatever appears on the credit side, we will just start including on the same side. 40 was appearing on the credit side, and 90 was appearing on the debit side. So let's include and then start naming what was the thing. Okay, so 90, and here 45 pounds on the credit side. So let's include those. Now these were, we have to write the dates and from whose account it has come. So the first 240, okay, this had come from discount allowed, so you write as discount allowed. This had come from the discount allowed account, and the second one 45 had come from office expenses account. Okay, so you will include that office expenses 45, and this 90 had come from the gerund account, so you will include gerund. So you will include gerund. Now we also have to put the dates. Okay, so all this have been done on 30th April 2023. So we have to include the dates, and then we have to see what was the difference in the original trial balance that has to be included here. So the difference in the original trade balance, trial balance, have to be calculated. So 240 plus 45, that's 285. Okay, 285 and the minus 90 we had to do. That will go acts as a difference, okay, that has to be incorporated, that has happened due to the trial balance. So you'll find the small difference, okay, because of certain errors which doesn't have double entry. So 285 minus 90, it will be 195. Then this is the suspense account, okay, this is for the suspense account, and you have to include the dates. This is 30th April 2023 and this is a closing account, okay. So the suspense account is a closing account, you don't have to do anything, okay. You underline the 285 by two double lines, if double lines, and leave it, okay. So 30th April 2023, just include the dates also, okay. Then explain the term net realizable value. Inventory valuation is based on the selling price less any additional costs required to make the product saleable, okay, to make the product saleable. Example, the cars have to be made saleable. Example, any repair costs included must not be included in the original cost of the cars, because that that doesn't it should that is the net realizable value. We have to not include any repair costs, okay, only include the